Hi there, it's Alicia Stearman, and I just wanted to go through with you on what to expect through this process. So congratulations, you're currently approved. You're going to go house shopping. So the next step is when you guys find a house that you like and you want to write an offer on, your agent's going to call the listing agent and collect data. They're going to ask questions like, is there any other offers? How long has this been on the market? What is motivating the seller? Does the seller want to rent back? Would that be good for them? Do they want to close quickly? So that they can package a successful offer so that you guys win. Okay, so a couple of the pieces of the puzzle that are negotiable are money, so the price of the home. 2 is how long you're going to take to close the transaction. 3 is going to be 2 specific categories, which is your contingency periods. 1 is your appraisal contingency. What that means is you're going to get an appraisal done and it's going to come back in time for you to release appraisal contingency, meaning that when you give them a deposit, because when you go to make an offer on the home, if you get accepted, you're going to give them a deposit, typically 1% of the purchase price. They're going to hold that at the title company. When you get your appraisal done, if you negotiate a 10-day, 12-day, 15-day, up to 17-day appraisal contingency period, you're telling the seller, I am not going to back out past this point and blame it on the appraisal. Okay? So that's one contingency period that's negotiable. The sooner you sign off on that, of course, the sooner the seller feels comfortable that you're going to close the transaction. The other negotiable item is the inspections. Or there's 3 actually. So the inspections are the second one, and that's how quickly you're going to get your home inspections or termite inspections or any inspections you're going to get done. And the third is the loan contingency. Loan contingency means that after that point, you're not going to back out and blame it on the loan and say that, let's say your loan didn't get approved as an example. So the shorter those periods of time, the more attractive your offer is to the seller. So I like to get your loan underwritten ahead of time. It's very few pages for you guys to sign, and it allows us to get it in front of an underwriter and get an underwritten approval. It's a very quick process, takes just a few days with my team. They're awesome, and the disclosures are not committing you to using us. They're not committing you to doing this loan. They're authorizing us to get you underwritten, okay? So basically, I do recommend that. That allows us to offer as short as 14 to 17-day close of escrow dates. Okay, that's so much more attractive than everybody else who's doing 21 to 30. So I don't know about you, but I would rather negotiate time than purchase price or money out of your pocket. My job is to save you money. At all times, I'm looking at this transaction and how can I save you money? So basically, while you're writing offers, you're going to we're going to go over those payments. We're going to go over numbers, and your agent's going to call me and say, great news. We found a house. We're writing an offer. I'm going to contact you and go, let's talk payments really quick. Let's just make sure nothing's changed. We go over it. We get a strong offer submitted. I don't care if it's the weekend. I don't care what day it is. We're going to be doing it together. It's a team sport. And the minute that offer goes in, boom, I call the listing agent. Hi there. I'm super excited. I'm the lender. Yes, I know it's a Sunday evening, but it's really important to me that you know that we are going to perform on time. We're going to close on time. I offer an on-time closing guarantee as long as my client gets me all of their documents requested within 24 hours, or I will pay any expenses incurred due to us being late. Does that make sense? So if it's our fault, if we, the lender, took too long, we will cover all expenses. So the listing agents love that. Let me tell you, they love that. The other thing I do is I try to pick their brain with giving me some insight of what the seller's looking for. So I make sure they understand my client has an amazing credit score. He's been at his job long term. I brag about you. And then I say, I want to make sure you know we're going to do Tuesday updates. Every single Tuesday, rain or shine, we're going to be reaching out and updating you on the process. So everybody always knows what's going on. So these are the things I tell the listing agent. I also say, hey, out of curiosity, is there anything you could tell me that's going to help us package this deal to make sure that we win? And it's just a second attempt. Your realtor already did this. I'm going to do this as well to try to get you some insight. If there's other offers on the table, I want to make sure that you win. So we are collecting this data together so we get the opportunity to get into contract. Once we win, now the work is to be done. So the day you get into contract, we are going to be calling you to get you locked in, get your interest rate locked in, as well as sending out your disclosures. So we go over your interest rate, we lock you in, we order your appraisal because that's time sensitive. You're going to get an invoice request for the only out-of-pocket cost involved in this that has to do with your loan, which is your appraisal fee that you pay out of pocket. You give the title company your earnest money deposit of 1% minimum up front. That's negotiable, but 1% is pretty typical. But you're going to do that when you get into contract as well in the first 3 days, okay? Now that money will be applied towards your down payment later and your closing costs, okay? So the minute you get into contract, we send out the disclosures, we order the appraisal, we let you know if there's any missing or updated documents required. Then we submit your file to processing. Within 24 hours, the processor reviews that file, lets us know if there's anything needed to go to underwriting. If it's complete, sends it straight to underwriting. Underwriter reviews the file. 48 hours later, gives us loan approval with a checklist of exactly what they need to send your loan documents to title. If you're putting 20% if you're putting 20% down or more, then sometimes your appraisal gets waived, but we'll let you know that at that point, okay? Otherwise, we're going to accept your appraisal fee as the only out of pocket. Once the appraisal comes back and the title report come back, that's typically when we get our clear to close, okay? So it's typically 2 weeks into the process if it's a 30-day escrow. And at that point, we will send your file to the document department where they're going to balance, cross the T's, dot the I's, make sure that everything is perfect. And then they send their first draft to the title company of all the numbers. And the title company goes back and forth for a few hours to finalize the numbers, make sure everything's right. Then we call you to go over those numbers. And once we go over those numbers to you, we release the docs. Now, about when you get loan approved midway in, we send you a document called the closing disclosure. So that's basically round one of all your numbers, okay? The initial loan estimate is so beginning phase. We haven't collected a lot of data at that point. So it's a good estimate, but it should never go up, only down from the original estimate, okay? So the closing disclosure is round one. But we do update that 3 or 4 times throughout the process until the day you close. And again, with us, we guarantee our closing costs. So they will never go up, only down on you from the date you get into contract. So awesome. I know that was a lot of information. Once you sign, we will have you do your wire or a cashier's check. And then typically the next day we record in the afternoon at 4 o'clock. So just be prepared for that. Don't set the movers up. Now, what I don't want you to do through this process is please don't go shopping and spending a lot of money on credit. Please don't spend a lot of cash because your reserves were counted when we pre-qualified you. Please don't make cash deposits into your bank account like $100 bills. Checks are totally fine. Okay. And then the last thing I want you to remember is we don't want your credit ran multiple times. Don't go buy furniture and things like that. That's a huge problem. It can affect you. If you're thinking about making a job change, let us know. If your car is broken down and you need to buy a car, reach us and let us know ahead of time so we can tell you how it's going to impact you. Okay. Now, I did want to cover that. I want to make sure I also cover what's going to happen when you close. If we start your transaction now and it's, let's say mid-month, the following month, if we close, you're not going to have a payment the first of the month after you move in. It's going to feel like you're skipping a payment. So normally when we get your loan approval, that's when I tell you to go ahead and give notice where you're living or where you're renting, because at that point, you're typically going to get out in the next week and a half to 2 weeks. So that way you have a teeny bit of overlap between the two places. Okay, so you're not stressed trying to move in a day. The other thing I wanted to share was that you will get a supplemental property tax bill likely in the first year of home ownership. What that means is you buy the home for one price and the current tax assessor isn't going to acknowledge that for 6 or 7 months. So the taxes are still wrong based on the old owner's rate. We, the mortgage company, set your mortgage up correctly, knowing it's going to change down the road. However, if a bill comes due between now and then, they're due in April and December. If it's still wrong, we're going to pay the wrong bill. And then there's going to be overage left in your account. And then you're going to get a bill in the mail called a supplemental bill. And you're going to go, oh God, what do I do? You're technically responsible for that. You have to pay it. But if you don't have the money, you can call and we can see if the escrow account has enough. and we can try to get it paid through the mortgage company, okay? Otherwise, you pay it and you can get a refund the following roughly January. But that's called a supplemental tax bill. Just be prepared that it is something that does happen, and it adjusts in about 7 or 8 months. Now, I know that was a lot of information. I just wanted to give you guys a video so you can come back and rewatch it later. I'm so excited, and congratulations again, and happy house hunting. Look forward to working with you. Have a great day.